Good morning, traders. It is 8 a.m. Chicago time on Tuesday, the 31st, January 2023. This is episode number 2403. A quick reminder that it is end of month here, folks. It is end of month, the first month of the year, which many use as almost like an initial balance for the year, as a kind of an early indication of how the year is going to go. So again, end of month and FOMC tomorrow. End of month and FOMC tomorrow. So just be aware that into the close today, the cash close, very likely to see some revaluation or some risk off or something, or at least risk hedging. So that's where we stand. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. If you have not done so already, please go to the link provided in the live chat. The link is http:// or I should just say ft71.com. Again, ft71.com/YouTube. Lowercase YouTube, ft71.com/YouTube. If you have not, this is for you. If you have not subscribed to the channel, this will take you to a link to subscribe to the channel. Please subscribe to the channel. It improves its ranking and it helps other traders discover it. We've been doing this for a long time. Again, this is episode number 2403. There are 252 trading sessions in a year, so we're closing in on 10 years of doing this. And we're still kind of following the same method. Those of you who have been around a while probably hear this broken record every morning, but it is the process. It is, and the goal here is to trade as a career professional. This isn't a channel for a quick pop of someone just putting on some size on the Nasdaq and having trades either go or not. This is more of a professional approach, something you can model your approach on, since there isn't much material online that goes through the entire process. Okay, so that's the purpose of the channel, is to kind of treat you all as if you are my personal prop traders working for me, and I'm preparing you every day to be professional traders. That's the goal here. So diving right into the conversion trading pre-market summary sheet. 1 second. Diving into this pre-market summary sheet. Again, we see ourselves opening mixed this morning. The S&P slightly higher, 11.5 points. This actually has been a pop higher just in the last maybe 20 minutes or so. We did have a bit of a what looks like a spike down into 4,750. Well, that was swiftly rejected. We'll look at that in a little bit in the S&P, but overall we have a kind of a mixed open, in that we are opening around settlement or pretty close to settlement. We're only within 1 or 2 rotations across the board, really 2 rotations across the board within settlement. We consider that mixed risk. Europe is off. Europe has been off since it opened today. This morning, again, earnings are king right now. Earnings are in focus. And this morning we got ExxonMobil, XOM, which reported big profits, $3.40 versus $3.29 on revenue of $95 billion. Expected revenue 94.67, came in at 95.429. The other one is General Motors. General Motors, another one that's killing it. The expectation for General Motors was $1.69, came in at $2.12, beating by more than 25%. Revenue was expected at $40.65 billion, came in at $43.1. Phillips 66, which is another energy provider, missed, came in at $4 versus $4.35 on $40.9 billion. Marathon Petroleum came in and beat by 17%. United Parcel Service came in line, basically $3.62 versus $33.59. They did miss on the revenue number by $1 billion. Pfizer came in at $1.14 versus $1.05, beat by 8%, missed slightly on revenue. And then Cisco came in, this is SYSCO, came in at 80 cents versus 84 cents, missing, but beating revenues 18.594 billion. Caterpillar, big player, big player in the Dow, $3.86 versus $4.02, missing by about 4%. And those are the big ones. Mondelez, UBS came out. UBS beat by 31%. Amgen, McDonald's beat by 5%, and so on and so forth. You have your own earnings calendar. I'm not going to spend too much time on this, but these are all big pieces of the puzzle here across the S&P, Dow, Nasdaq, and so on. And they should be paid attention to. After the close, we still get Chubb, Mondelez, Amgen, AMD, Stryker, and Western Digital. Softer employment cost data this morning. The employment cost data came in just slightly under prior, which is bullish, right? Because it relieves the Fed a little bit. The IMF raised global growth forecast. Strong China PMIs amid reopening. French CPI prelim lower than expected. EU GDP higher than expected. U.S. Biden to end COVID-19 emergency declarations by May 11th. And then what's left for today, and we already hit the Case-Shiller numbers this morning. Case-Shiller came in at 6.8% in line, and month-on-month came in at a miss of 0.8%. Expected a miss of -1. We do have Chicago PMI, which please remember that it's 942 is when subscribers get it. They get a 3-minute head start before the numbers released to the public. Chicago PMI due at 9:45, expecting 45, so we might see a move into that. We do get consumer confidence, expecting 109 at 10 o'clock, and then that clears us all the way through to the API crude oil stock change, which comes in at 4:30 p.m. And then this evening we get the Chinese Caixin manufacturing PMI, which is a key figure, at 8:45 p.m., expecting 49.5. That's what's on the calendar. The S&P, real quick overnight stats. The S&P 295,000 contracts traded overnight, quite heavy. The inventory is 11% short, so relatively balanced. The range is pretty good at 41 points. The mode for range is 31 points, as you see underneath on the chart in front of you. Point of control, 4040, and the low at 4,750. So here's what's on deck. The S&P, really interesting spike down this morning and reversal. It pushed down and it quickly flipped back up and came right back into line, forming what was a bit of a inverted head and shoulders, which is breaking higher. The expectation, those of you who are in the Convergent chat probably saw that I posted that this, when it was down in the 30s, you probably saw that I posted that this is very likely to retest the 40.50 from below. The current high is 40.4850, so it's well on its way. You can see that there's been this trend line down on the S&P. This is using full session, and we just tested the trend line from above, as we often do. It was actually tested here as well, and so we have a downward sliding trend line. We did put in a peak at 4109. We put in a lower high yesterday as expected, and then we're likely to put in another lower high today. We're one time framing down on the daily in the S&P. I'm expecting that to continue. So that's a key piece there for this morning. Here's what the chart looks like for the S&P TPO, or the market profile chart. Yesterday, really quite balanced. You could see that since last Thursday, Friday, Monday. So yesterday's main plan, if you all remember, yesterday's main plan was we open up and we're likely to continue to push lower, but we're likely to check up. I was looking for it to kind of push up into this 4063 area. So if you recall, I talked about 4063 being a key test area. 4063 to 4065, there's some confluence in this zone right here. We tested value low, value high of Thursday. On Friday, that was the low on Friday. So the expectation is that 4063, 4065 will present some problems for buyers and likely to roll down. And the alternate plan is if it pushes up into 63, 65 and squeezes through, pulls back weak, then we're looking for a gap to settle trade up there in the 4080 area, and that's what I was basically shooting for yesterday. So to me, this is yet another balancing day. So you can see they're relatively Gaussian profiles. Wednesdays was not, but Thursday, Friday, and yesterday really are Gaussian profiles. This is a market that has found the other side and is struggling. So what we have is a rounded top here in the ES. We breached the 4100 again. We went up to 4109. We breached the 4100, and many have been macro type folks have been talking about 4100 being kind of a tough area for the S&P to take and hold based on valuations. So I don't know. I can't trade off of that information, but it's interesting to know. Here's what the action looked like yesterday in the S&P. Was ist going on here? So S&P, here it is. So yesterday, if you recall, 4063 area, this is it. So we open up yesterday down here. We test down quickly. We push up. We form an opening swing right against the overnight mid. Okay. And then we push into 63. And as we push into 63, we end up, as we push into 63 up here, which is right up here, 63, 65, okay, 63, 65. As we push up, you can see it does have a response. It responds back to the RTH mid, then it breaks through, consolidates, comes all the way through, and then once it gets above there, this is a signal to buy a pullback long, and the pullback long would then target the gap, the prior settlement, which was in the 4082 area. The best it could do was 4078. Once it punched into that 4078, it came off kind of strong, giving up the RTH mid, full session mid, full session VWAP, and once it did that, now we're looking for a pullback to get short, and the target is 4040, the overnight low right here, 4040, and then the bigger target was 4030. If you recall, we talked about this 4030 area, and then beneath there 4015, beneath there the 4000, and then we get into the 3992, right? And so this is on any selling, the key target becomes, we initially play the 4040 because the overnight stat is quite prominent, and it's extremely high historical probability. So that's one good one to aim for. And it wasn't able to do that all day. In fact, yesterday was a bit of an anomaly to take out the overnight stats so late in the game. In general, we do it quite early. We got pretty close early on, but we finally pushed through, and we ended up right in here at the 4030. Okay. And so that's where this stands. So once we reopened this morning, immediately selling off, you can see the impulse down, comes and claws itself back right back up here, and then falls right through. The European markets open right in here, and you can see there's this spike down. There's this quick spike down and return, and what the market is doing is it's battling and remaining above this 40-30 range. So this is a key LIS for this morning, but it also happens to be our key magnet for this morning. So an early line in the sand and a key magnet here, and we are really fighting it out. We'll look at the delta in a minute. To me, it's a very confusing look because we did form a left shoulder, head, right shoulder, consolidate, and then we finally lifted. And you can see in this lifting, there's quite a bit of buying going on here. There's pretty decent lifting into this 40-36 or so, and it kind of continued all the way through. You can see these blue bubbles pushing all the way through, but we're not seeing the delta carry forward. So let's take a look at the delta real quick right now. Look at that delta. Where are these guys? Even though we saw pretty good dots coming off of the prior settlement of 40.32 in that 40.30 region and breaking higher, we do see some participation, but it's all small lots, and the delta is really at zero pretty much. The delta is at 820 plus 820. And to me, this just looks precarious. It looks just very odd. Very large lots not participating here despite those big prints, and getting offset pretty quickly, coming right off. I don't know. This looks like a balance trap here. It looks like short time frame traders are in control, and it looks like it's likely to be pretty choppy coming into this morning. As much as we saw that nice spike in the overnight session, you can see it right here. Nice little spike in the overnight session with pretty good volume at the 40.20 and 40.30. This thing doesn't look like it's got any conviction. Okay, there's no aggressor holding, carrying and holding the delta here with price. Price and delta are not moving in the same direction, right? Delta should be quite positive at this point. So in my opinion, it's very likely to hold yesterday's range, and it's very likely to test key areas of yesterday's range. And key areas of yesterday's range, if you recall, we had a very bizarre VPOC here. We ended up shifting in what was a very blunt profile, a very balanced profile. We ended up shifting the point of control, the volume point of control, to the low end of the range. Very odd looking profile yesterday. You can see it a little bit better in this chart here. You can see that it had a pretty decent kind of a balancy play right in here, right in this box right here. And it ended up selling off, and when it sold off, it traded so much at this 40.32 area that it shifted the point of control down, despite the fact that, you know, we had a lot of balance up top. So to me, this was a very with a very blunt low. Look at that low, just a very poor low, and we ended up shifting that low down, as we would expect with a weak or blunt low. We would expect the market to actually test below that low, which it did, and it did again, but then it's coming back and it's stuck here at 40.30. So we're at 40.30. This is the magnet. There's no real lifting going on. We have rejected 4,007, so it looks like we have found buyers, but even though we have found buyers, it was done on very, very thin air, given the volume and the relative delta, right? This is insight that you don't get from just a candlestick chart or a kind of a pattern trade. We're seeing more details in here that tell us that that tell us that something odd is going on with the fact that this has kind of been trending higher, but there's very little participation in the process. So we'll see. I think they're going to have a hard time lifting today. So when we look at the TPO detail, we are now done with the structure here over these days. So now we merge these together to discover where we are versus what the structure is of the last few days. So relatively good kurtosis here, relatively sharp profile, fairly balanced, pretty clear resistance here. Remember the 63 to 65 that I talked about yesterday is kind of the key price over under. Well, the point of control is now 64.5. This is going to be a key area for me to watch. So any push higher in here, I'm going to be monitoring for weakness on the buy side to short back into settlement if it doesn't take settlement out early. If we try higher and push through settlement and pull back and we're weak, then we're looking for that low, 4,750. We're looking for the overnight low, 4,750, 4,000 beneath there, and then we're back to 39.92/90 as a key target. That gives us quite a bit of range, right? 40 points or so to work with. So there will be multiple opportunities to enter with enough room to get to the target to the downside. So to me, I'm skewing based on the context and the narrative. I'm skewing to the short side. We did have, again, we had a blunt low yesterday, but a blunt low also means that somebody was there to absorb that size, and then somebody was flushed overnight. And here we are back into the prior day's profile. So to me, there's strong indications that sellers will be motivated, but also strong indications that buyers are active in this area. So what do we end up with in that situation? We end up with chop, right? Very probable chop. So that's the S&P in a nutshell. The NQ, let's look at the NQ TPO chart. NQ rolling over as well. NQ was much more aggressive. You know, we've seen pretty strong strides from Tesla and other big players in the NQ, so it's been pushing pretty good, not as balanced, and now we're back here and we're battling in this 12,000 zone yet again. We're trading at 11,990. I talked about the 12,000 yesterday. If we give up, and I talked about if we give up the 12,000, then we're likely to see the 952, the 950, and then if the 950 doesn't hold, this area right here, which we got very close to, the 950 doesn't hold, then this thing has quite a ways to go to get down to 11,800 and 750 would be the next key rest stops for the NQ. A little bit of structural repair here in the NQ. Here's what the TPO chart looks like. What I'm going to do is integrate these profiles together, merge these profiles together to see what kind of monster we're dealing with above. So here it is, 11,042. It was 12,042. It was 1250. So again, the NQ, any push into that, the first push into that 12,042, 12,050, looking to get short, push back, and the goal is for it to fall out of range and clear this 11,900 area and start working its way down to the 800 and then the 750 below. Bearish, right? So I'm leaning bearish this morning, but as you all know, if it does take over, then this is a strong indication that a lot of people are likely to get squeezed right back into the 12,200 or so, and then we're back to challenging that high. So it's the same kind of outlook. The narrative tells me one thing, but I'll trade it in either direction. Here's the Here's the Nasdaq. The Nasdaq has this kind of line in the sand area right here. Oops, right here, which we hit this morning. Okay. And we want to, it's not likely to hold this area. I'm expecting that it'll likely make an attempt, push lower, and then start moving towards the 11,900 this morning. But if it gets above this 12,020 area and holds, then we're looking for it to squeeze to 12,100, and then who knows where it goes from there. That's, I know, it's a little murky right now. Crude is very well telegraphed. Once we had that Friday massive range here, the plan for crude yesterday is any push into the prior range, we're opening in a gap below. Any push within the prior range, we're looking to sell that and back out. So settle the low, check out the low, check out settlement, check out the single. It pushed the single by a few ticks and failed lower, and it ended up closing lower. So that's where it opened, that's where it closed. It settled at 77.90, and if you recall, crude, I've been talking about this 7,700 level right in here, and we hit it this morning. We went to 76.55. So crude is actually seeing some support. Check out the relative delta in crude. Look at that, baby. So as crude is consolidating in the 7,700, remember this is a key area, 7,700, very key structural area. As it's holding the 7,700, they're lifting it. They're lifting and lifting and accumulating and lifting and lifting and lifting. Okay, so crude is kind of at an inflection point. I believe that crude is very likely to finish in range. So crude is very likely to come back into the 78.50 area in the session. So it has to get through to settlement. There's a gap to settle trade currently in crude, right back into the 77.90. And if it falls back through and then continues higher, once it takes out the gap, then we're looking for 78.50 in crude. Crude is very likely to push into the prior range. Crude is being well supported. Okay, I'll leave you with that. Again, I want to remind you, take a moment, go to ft71.com/YouTube, all lowercase. Subscribe to the channel so you can get notified of the very next video. Thank you for being here, and hit the like button, of course, to help others find the channel. I'll catch you at tomorrow's Trader Bite, 9 o'clock in the morning. Take care.